This is James Chen with FX Solutions, and I'm going to be talking in a minute. Great talk by Ed Ponzi once again, as always. And he has a great book out, a new book that I have a little testimonial on back. It's excellent, so if you want to take a look at that, that'd be great. So hopefully everyone can hear me. Okay, good. It looks like everyone can hear me. Great. Now, what I have in front of you, if you take a look, this is, and I'm going to be spending some time talking about this strength-weakness that I've talked about on many occasions. And if you take a look here, just as Ed just mentioned, we see a lot of, there has been a lot of strength on the euro. If you take a look at, this is the hourly strength and weakness up here, and then we got daily over here, weekly, and then monthly. And basically, what this is telling you is that there has been on multiple time frames, agreement on multiple time frames that the euro has been strong within the last hour, within the last day, within the last week, as well as within this last month, which is basically January, since the end of last year. So we take a look at this, and we could see lots of strength in the euro, and also we see, especially short-term, lots of weakness on the yen. Okay. And then also we have Swiss franc very weak on the monthly. Swiss franc is weak on the weekly and also on the daily, and it's sort of wavering on the hourly. So I'll talk about this in a second. Because I've had a lot of people ask me about the strength and weakness focus that I've had for the past several months that I've been working on. This is an Excel spreadsheet that I put together. Actually, I have some help putting it together, but basically what it's telling you is, on different time frames, which single currency is the strongest and which single currency is the weakest, and then you have a hierarchy of strongest to weakest. So that's basically what I'm looking at now. So I'm gonna let me get started with my PowerPoint here, and then we're going to go ahead and get into more depth. Both on the regular charts as well as on this Excel spreadsheet that I have here. Okay, I have this question here by Roger. That's a great question. Are your strength weaknesses calculated on a rolling basis, i.e. monthly as previous 30, 31 days? I'm working on that. For now, the monthly strength and weakness simply goes back to the beginning of the calendar month. Okay, and the weekly goes to the beginning of the week calendar week as well. But I'm working on it. It should be on a rolling basis. So the monthly would be the last 30, 31 days. The weekly should be the last 7 days. Daily should be the last 24 hours, etc. So, but for now, this also suffices in measuring, although it's not on a rolling basis, it also suffices in measuring strength and weakness on different time frames. But I'll get to that in a second. So let me bring up my PowerPoint real quick, and then we'll get into a little bit more depth on this. Okay, so once again, welcome everyone to this webinar. This is called Finding High Probability Trading Setups. It's my monthly webinar here on fxstreet.com. And, what I do here is I talk about how I approach trading in the Forex market and what I use. Now, a lot of this, this material you may have seen before if you attended my webinars in the past. But I'm just going to go through them real quickly, and then we'll get into the strength weakness and see, in terms of looking at the strength weakness charts, how you could, at a glance, see what are the opportunities in finding high probability trading setups. Okay, as opposed to looking directly at the bar or candlestick charts. On the strength weakness chart, it's very easy at a glance to be able to see what's going on. And, I'm also going to, possibly in the future, I'm going to be doing a webinar on how you could create your own strength-weakness database, okay? It's really actually pretty easy. All right, so before I get started, quick notice, Forex trading involves substantial risk of loss and is not suitable for all investors. The information contained herein is solely for informational purposes and should not be construed as trading advice. And you could take a second to read the rest of that, and then I'm going to go forward. Okay, just quickly about me. I am the Chief Technical Strategist at FX Solutions. My name is James Chen once again. I've traded actively as a private trader since the inception of retail Forex, using primarily technical analysis and trend follow. I'm a Chartered Market Technician, or CMT, which is a designation for technical analysts here in the U.S. and abroad. I'm registered as a CTA, or Commodity Trading Advisor, with the National Futures Association here in the U.S. as well. I publish daily and intraday analysis, including my chart of the day that you'll see on fxsolutions.com, as well as fxstreet.com, among many others. I have a Forex analysis and education blog at fxpath.fxstreet.com. And I've authored numerous articles in such publications as you see here: Forbes.com, Futures Magazine, Technical Analysis of Stocks and Commodities Magazine, as well as SFO Magazine. And just a point of note, on the current SFO Magazine, which is the January issue, you'll be able to take a look. It's all online and it's free. You go to sfomag.com, you'll see I have a current article, and it deals with this strength and weakness, combining strength and weakness with multiple time frame trading to find high probability opportunities. So you can take a look at that. It's on sfomag.com. And it's a current issue. And also, I did have, just recently, Technical Analysis of Stocks and Commodities Magazine. I had an article come out, and basically on the same subject, which if you don't know already, I think is a great way to approach trading the Forex market. And also, I'm quoted on a regular basis by Reuters News, Dow Jones, Associated Press, International Herald Tribune, among others. I'm the author of 2 books, Essentials of Foreign Exchange Trading and Essentials of Technical Analysis for Financial Markets, both of which came out in the last couple of years. I have a DVD set on that's published by fxstreet.com. It's called High Probability Trend Following in the Forex Market, and it's all about trend following, which is one of the things I really focus upon. So you could take a look at that as well. It's available on fxstreet.com. Okay. Now, what are my primary trading principles? And if you've seen any of the recordings, or if you've attended any webinars before that I've done on fxstreet.com, you'll know that basically what I'm looking for is to, and these are the primary trading principles that I'm looking at. But what it brings it all together is high probability opportunities, seeking high probability opportunities. And what do I mean by that? Every single tool that I use, every single concept that I talk about when I trade comes together to basically, it comes together under high probability opportunities. I'm looking for and I'm waiting for high probability opportunities. And what are the primary trading principles that I use to do this? Trend, number one. Okay, and trend can be on any different time frame. It doesn't have to be on a long-term time frame. A lot of people say that if you trade on if you're looking for trend, you're looking for the long-term trend, you're looking on the daily trend, the weekly trend, etc. Not necessarily. There are trends that occur on different time frames, and as we can see in the past several hours and the past several days, we've seen a lot of trending up in the euro dollar. And essentially speaking, we're in a downtrend, and I'm still long-term bearish on euro dollar, despite what has happened in the last couple of days. And but in the last couple of days, the trend has been decidedly up, and you'll be able to see that on both the charts as well as on any strength-weakness database or spreadsheet that you have. Okay. Now, number two, strength-weakness pairing. What I talk about a lot. Strength-weakness pairing is basically, and I'll mention more about this in a second. But basically, what you're doing is you're taking single currencies and you're looking for strength or weakness on those single currencies against all the other currencies, all the other major currencies. And from that, you're extrapolating the strongest currency and the weakest currency among all the currencies, and you're finding the best potential opportunity there. Now, what is the basic concept of this? The basic concept is that you're looking for the best directional, or the most the strongest directional bias you can. Okay, and because, as we all know, currency pairs are traded in pairs. They're not traded alone as you would trade a stock or you would trade, an index or what have you. Currencies are all traded in pairs, and because of that fact, we could take the strongest and weakness, pair them together, and we have a stronger or a magnified or even a doubling of our directional bias because we're buying the strong, we're selling the weak simultaneously, as well, as opposed to just buying the strong or selling the weak. Okay. Okay. Roger, I see all the questions created a similar sheet, but it's giving slightly different results to yours. We'll go over that in a second. I'll tell you exactly how I do it and see how we might differ in terms of the strength weakness database. I see you say, do you use all different combinations of the majors to calculate the strength weaknesses? I use all of the majors. I use seven of the major currencies. I exclude New Zealand dollar, and we'll talk about in a second why I do that. But I exclude the New Zealand dollar. I have the euro, the British pound, the yen, the Swiss franc, and then I have the Australian dollar, and I have the Canadian dollar, and the U.S. dollar, and that's it. So 7 different currencies, and I compare them. I take the average percentage price change against each other, and then that's how I extrapolate the strength and weakness. But I'll show you that exactly how I do that in a second. Okay, so that's strength weakness pairing. Multiple time frames. Now I do a lot of multiple time frame trading, and and one of the things that I've lately been doing is taking the multiple time frames and combining it with the strength weakness pairing. So I'll show you exactly how I do that in a second. And you can go to SFO magazine and take a look at my rationale for doing that. I have a whole article just based upon this. Confluence, I talk about that a lot. It's just coming together of different rationale for getting into a trade. Support and resistance, you should all be familiar with that. It's one of the key cornerstones of what I do. Volatility, consolidation, breakouts, also one of the stronger concepts within my trading approach. Locking in gains, I often do that when I'm in trading, especially if it's going strongly in my favor. Risk management, probably the most important aspect of any of this, and we'll talk about that briefly in a second. Okay, so let me just go over this briefly, and then I'll go over my database, look at some currency pairs, etc. Okay. So trend, very, very simple. Take a look at this. I'm not gonna beat this to death because I know most of you are familiar with what a trend is. Now, a trend, when you talk about the strength and weakness database that I just showed you, the trend is, basically what I'm talking about is trend and momentum. Okay, so you want to take the path of least resistance. You want to ride the market momentum. Okay, and this could be whether it's on a longer-term basis, a medium-term basis, or a very short-term basis. You're looking to take the path of least resistance. If price is going up, we as technical analysts or technical traders, what we do is, we like to take advantage of market momentum. So if price is going up, then perhaps, it would be a good time to get in. Of course, you're going to wait for your signals, but it would be a good time to get or take advantage of the market momentum. Not necessarily after the move has exhausted itself, but on its way up. Hopefully, what you're doing is trying to take advantage of the market momentum, which is basically what trend is. Okay, so we're looking to take the path of least resistance. You're looking to ride the market momentum, and as we all know, currencies tend to trend very often and for prolonged periods of time. So that's whether it's on a short-term basis or a long-term basis. What I always talk about is wherever possible, I'm going to trade with the strong trend. Okay, but I will always avoid trading against a strong trend. Okay, so wherever possible, most of the time I'm looking for opportunities to trade with a strong trend, but at the same time I am always avoiding trading against a strong trend. Okay, so I'm not looking to hunt for tops and bottoms. It's a very difficult thing to do. So I'm looking to ride the market momentum. Now, what I like to do within the context of a trend is I like to trade consolidation breakouts or retracements and corrections, breakouts or retracements and corrections in the direction of the trend. And when you are a trend follower, you like to target substantial profits during prolonged trends to more than make up for smaller controlled losses. Okay, let's go on from there real quick. Strength weakness pairing. And Philip, no, I do not use harmonics. I'm not, I did have to study some of that for chartered market technician, but I am not a big fan of harmonics. Strength weakness pairing. Okay, so unlike any other major financial market, as we all know, spot currencies can only be traded in pairs. Okay, and this is a distinct advantage. Unlike stocks, unlike futures, in the spot forex market, we're trading in pairs. Now, whether it's a pair like the euro dollar or the dollar yen or what have you, or for example, even if you're talking about the dollar index, we're not trading the dollar index. We're not trading the dollar in isolation. It just cannot be done. We're trading the dollar against a basket of different currencies. Okay, so basically, most of that basket is taken up by the euro on the dollar index. But essentially speaking, whenever you're trading a forex currency, you're trading it in as a pair. You're trading it against others. It's all relatively speaking, as opposed to an absolute like like a stock might be, or a futures contract might be. Okay, so because of that, we have a distinct advantage. And why is that distinct advantage? Because, and we always talk about this, that you buy strength. You could buy strength while and you also sell weakness. Now, only in the forex market can you buy strength while simultaneously selling weakness. And if you think about this, basically what this does, it magnifies the directional potential of your position. So if you have if you're trading Apple, let's say, if you're trading Apple, the stock Apple, and you're looking for strength, and you're buying strength and or selling weakness, that's great. But if you're looking at the euro dollar, for example, you see strength in the euro, and you see simultaneous weakness in the dollar. By buying or going long euro dollar, you are essentially magnifying the bias of that position, the directional bias of that position, because you're going long the strong while simultaneously going short the weak. So very, very powerful, this stuff. Now, strength weakness, as I'll show you in a second, can be measured by percent price change against a basket of currencies, of single currencies. So, for example, I'm taking the euro, and I'm taking the euro, and I'm looking at the percentage price change of the euro against the US dollar, the Japanese yen, the British pound, the Swiss franc, the Australian dollar, and the Canadian dollar. I'm averaging that percentage price change over a given period of time, and then I'm comparing that average percent price change of the euro against the other currencies. Okay? Now, this could be either weighted or unweighted. So, for example, what I do is I do it on an unweighted basis. So, unlike the dollar index, let's say, where over 50% of the dollar index is made up of the euro, what I do is I compare them on an unweighted basis, where each different currency is the percentage price change is averaged on an unweighted basis, and I'll talk a little bit more about that in a second. Now, the strongest currency can be paired with the weakest currency to result in a robust trading position. Okay, so, and I'll show you how I do that in a minute. Okay, so that's strength-weakness pairing. Okay, multiple time frames. Now, different time frames, as we always know, will have different trends. I'm looking to seek agreement. So, on my strength-weakness database, not only do I have different strengths and weaknesses on the on different time frames, but I also have a feature where it'll tell me if there's agreement of the strongest and weakest on the different time frames. So let's say the hourly, the daily, and the weekly agree that the euro is the strongest currency on all those three different time frames. It's going to pop up a little notification that there is agreement, which is extremely useful, because at that point you have a signal that there is agreement on different time frames to go long the euro. Okay, so essentially speaking, I look on longer term time frames for the trend time frame, and I would only trade in the direction of the trend on the trend time frame. And I'll talk about that in a minute. And trends can be determined, on a traditional technical analysis basis. Trend can be determined on, by trend lines, moving averages, visual estimation, etc. So, that's basically what I do on a bar chart or a candlestick chart. Now. Okay, now, how do I have a question here. Why don't you analyze the futures instead of spot pairs? Then you would know which is the strongest currency. and not the pairs. All of the currencies, whether it's in the spot market or the futures market, are essentially, you have to trade them in pairs. So if you're trading euro futures, you're basically trading the euro relative against relatively speaking, against the U.S. dollar. It really cannot be done, on an absolute basis. It has to be done on a relative basis. So, I do look at futures, but what I'm looking at, and I think this is an advantage, is that you're looking at pairs. However you're trading currencies, you're looking at pairs, and when you're looking at pairs, the advantage is the fact that you could take advantage of strength and weakness and pairing them together to find a stronger directional bias. Okay, so how do I combine multiple time frames and agreement with strength weakness pairing? It's very, very simple. This is a simplified diagram here. If I'm looking at euro, let's say the euro weekly is strong, on a weekly basis strong. The euro daily is strong. The euro hourly is strong. At the same time, the U.S. dollar is weak. The U.S. dollar weekly is weak. The U.S. dollar daily is weak as well, and the U.S. dollar hourly is weak. Then at that point, I have agreement on multiple time frames that the euro is strong, the dollar is weak, and as I said, I have a signal on my database that tells me at that point what is the conclusion is to buy euro dollar. And this is not necessarily the case right now. This is just an illustration. Okay, so and I'll show you my automated strength weakness database in a second. I'm not going to go through this a lot. Confluence is simply the fact that when you have a coming together or a different rationale coming together to support a trade, then at that point I believe it's a higher probability type of trade than if you only, let's say, had one rationale for getting to that trade. So where possible, I'm looking for more than one technical factor to provide rationale for a trade entry. The more support there is for a trade, the higher probability that trade will tend to be. And Confluence is not about paralysis by analysis. I don't mean that you have to wait for all the stars to line up before you get into a trade. You don't have to be paralyzed by your analysis, but at the same time, more than one factor for getting into a trade, for me, is always stronger than just getting in, let's say price hits a support level, and you'd like to get in long on that support level. For me, that's not necessarily the strongest trade to take, because if that's all you see that's going on, then perhaps you don't have enough rationale for getting to that trade. Now, Confluence factors can be simultaneous or consecutive, etc. Now, I'm gonna what the key tools that I'm using here are support resistance levels, trend lines, Fibonacci levels, pivot points, bar and candle patterns, chart patterns, moving averages, oscillators, volatility indicators, etc. And here are just some examples of how I use Confluence. For example, let's say a horizontal support level coincides with an uptrend support line at the same exact moment, and you see this time and again on charts. If you draw, and I draw many, many trend lines on my analysis, if you draw a trend line, and at the same time, it's also a point where prior to that, price turned up in the past, or let's say it was a Fibonacci level that price turned in the past, if you combine those together, and that occurs at the same place, and it bounces at that area, if you have confirmation of that bounce, then for me, that's a pretty high probability opportunity to get into a trade. Also, let's say here, you have many instances where I'm drawing Fibonacci levels all over my charts. So let's say I have a major 61.8% Fibonacci level, and it coincides with a minor 38.2% Fibonacci level. And so when you have that situation where you're drawing from lows to highs, highs to lows, etc., all these Fibonacci retracement levels, and if they tend to congregate around a certain level, then that to me is a stronger possibility for getting to a certain trade. Now, Harley, the question is, aren't futures all paired against U.S. dollar? Yes, in the U.S., the futures, let's say the euro futures or the Swiss franc futures, etc., they're paired against the U.S. dollar. Yes, but you're still playing with pairs there. So again, it cannot be, if you're talking about the euro futures, you can't really be trading it in isolation. It's going to be paired against something. In this case, it would be the U.S. dollar. Rafa asks, wouldn't it be too late to enter in a trade waiting for a weekly, daily, and hourly confirmation? No. If you take a look and you see on the chart, early this morning, what happened was we saw a confirmation that the euro became the strongest. The euro has been the strongest in the last week and in the last, in the last day since yesterday, as well as in the last hour. At that point, this confirmation, this morning, and the momentum of the move took it much farther after that confirmation. So we're looking for confirmation there, and it occurred, and the euro became the strongest. And then I'll show you in a second, what I'm looking at in terms of the weakest. But that's what happened. A harmonic. Let me see. Roger, the question is: are the prices entered into the spreadsheet manual, or do you have it automated? These are. I'm working on having it automated, but essentially the prices they're on a live price feed, and that's done through MT4. So through MetaTrader 4, the prices there's a live feed going into the Excel spreadsheet, and then it does the calculations automatically. But there is some manual aspect to this, which I'm working on right now to automate that. Okay. That can be a harmonic. Fib clusters can be a harmonic. When you talk about harmonics, I guess you would be talking about the, whether it be ABCD patterns, Gartley's, butterflies, etc. Yeah, but I don't really work with harmonics. I do work a lot with Fibonacci levels, but not as much with the harmonics that you may be talking about, Philip. Okay. So another example of Confluence, let's say, and I use this example a lot. Let's say there's at established support, there's a hammer candle. A hammer candle is simply after a downtrend, you have a candle that has a small upper body and a long lower wick, and that talks about price rejection, price failure at the lows. And that, to me, if it occurs at an established support level or at a Fibonacci level or what have you, then that to me is stronger rationale for getting into a trade than if it was just at support level. And by the way, if I see a hammer candle that's not confirmed by anything else, any type of candlestick pattern that's not confirmed by anything else, I'm not going to get into that trade. Very simply, candlestick patterns can be extremely useful, but only if used in conjunction with other technical factors, other rationale for getting into a trade. Most importantly, support and resistance. Okay. Also, another example of Confluence, Bollinger Bands coinciding with strong support or resistance within a sideways trading range. Okay, and of course, support and resistance, very, very simple. I use both horizontal and dynamic, horizontal support and resistance and dynamic trend lines to denote support and resistance as entry zones. Bounces or breakouts can be used in this capacity. Horizontal support and resistance can be prior market turns, which I put a lot of faith in, prior market turns, but also Fibonacci's, pivot points, etc. Okay, consolidation breakouts, I use this very, very often. If you take a look at any of these chart patterns, basically what are these chart patterns but consolidations? And within the context of a trend, I'm looking for breakouts of those consolidations or slight retracements in the direction of the trend. Okay, so whatever pattern you're looking at, all they are, or the vast majority of them are breakout, or you're looking for, the vast majority of these patterns are consolidations, and you're looking for breakouts of these consolidations. No chart pattern would be any good without a breakout. If a breakout doesn't occur, then you've got nothing there. You've just got a lot of consolidation. So we're looking for breakouts of patterns. Let me see, retracements, corrections can be short-term counter-trend moves. Besides these chart patterns, if you look at a flag, for example, it's basically a counter-trend move, and we're looking for a breakout in the direction of the trend, preferably. Okay, volatility. I'm looking for volatility expansion, and this just goes back to the the consolidation retracement breakouts. Basically you have diminished consolidation in a chart pattern, or diminishing consolidation, let's say, in a triangle pattern. And basically what you're looking for is an expansion of volatility out of that consolidation or retracement. And preferably what you're looking for are, fast and strong volatility expansions in the direction of the trend. This is based upon assumption that in trends, low volatility follows high volatility and vice versa. Okay, low volatility is usually considered consolidation, equilibrium, or sideways price action. High volatility is strongly directional. Okay, and then the key tools for measuring volatility and changes in volatility that I use are, of course, my chart patterns, Bollinger Bands as well, trading ranges, average true range, etc. So many different ways you could look at volatility trading. These are examples of volatility trading. They include the Asian range breakout. So basically, if you have a tight range in the Asian range, the Asian trading session, and then you're looking for a breakout during the European or the London session, a lot of people used to trade like that. That's basically a form of volatility trading. You're looking for volatility expansions. Okay, trading dips and uptrends or rallies and downtrends. These are just methods of playing volatility. Breaks of tight horizontal trading ranges. Bollinger Band squeeze, where the Bollinger Bands squeeze together, and then there's a violent move in one direction where there's a large expansion of the Bollinger Bands. That's called the Bollinger Band squeeze, and it's it can be a very good way to play volatility, etc. So many ways to look at volatility expansion. Okay, and what I like to do is I like to lock in gains. For example, the least that would occur if price goes in my favor after a trade, after I get into trade, is that I'm going to take my stop loss to break even. After that, as price moves further into profit, I'm going to move my stop loss to follow that profit, to lock in my gains. And not only does this lock in your gains and lock in your profits, but it also serves to diminish stress and emotions when trading, which is very, very important. Okay, and then risk management, I'm not going to go through that much because although it is probably the most important aspect of anyone's trading, if you have a great trading strategy with all the best entries and etc., and you have not so good risk management, then I would give you not a great chance of surviving and consistently having consistently profitable trades. By the same token, if you have amazing risk management and only a mediocre, every trade entry strategy, then I would give you a much better chance of surviving and of being possibly consistently profitable. So risk management for me is extremely important. Okay, and this is just an example. This is a very nice downtrend here, and you have many different opportunities to get into that downtrend. And where are you putting in your stop loss? Just where price is possibly telling you that you're wrong. So this is just a very simplified version of where that might be. Okay, so let's look quickly at the charts, at my strength-weakness database, and let's see what's going on in the market. So if you bear with me for 1 second. Okay. Okay, once again here, if you take a look here, now, as you can see, price is moving. Price is moving on this chart. Now, basically, what I did here, and if you go up here, I'm going to scroll up a bit, and hopefully you guys could all see this. I'm going to scroll up a bit. Now, if you take a look here, what I've done here, and here's the live price feed. So as you can see here, it's the 13th of January 2011 at 10:36 a.m. Eastern Time, and you see these prices moving. This is simply, as you can see here, if you take a look up here, this is simply a MetaTrader 4 pulling MetaTrader 4 data. Okay, so I'm pulling the each pair's database into here. Okay, now, if you take a look up here, you have all of these closes. Closes is simply the current price. Okay, so I'm taking the percentage price change on different time frames. So as you can see here, since last hour, since last day, since last week, since last month, I have different prices for that'll represent the last hour, last day, last week, last month, and then of course all the closing prices are represent the current price, which on the euro is 133.31 at this moment in time. Okay, and basically what it's doing, it's taking each of these price changes, the difference between the open and the close, the open being, in this case 1 hour ago, and the current close, which is the current price. It's taking that, and it's taking the number of pips, and then it's taking the percentage price change. And it's doing that for all the different currency pairs. I have 21 different currency pairs. Now, the 21 different currency pairs represent seven currencies, all compared against each other. Okay? So, for example, once again, I'm taking the euro. Let me move over here. Now you take a look here. I'm taking the US dollar. Okay, these are the 7 currency pairs I'm looking at. US dollar, euro, Japanese yen, British pound, Swiss franc, Canadian dollar, Australian dollar. And basically what I'm doing is I'm taking the US dollar. I'm comparing it against the euro, the Japanese yen, the British pound, the Swiss franc, Canadian dollar, Australian dollar. I'm taking those pairs, comparing taking their percentage price change and then averaging all of them, and then I have the average right here. In the last hour, the average of the US dollar against all the others has been negative 0.13% on the US dollar. In the last hour, by the same token, in the last hour, the euro against, on an average basis, the euro against the US dollar, Japanese yen, British pound, Swiss franc, Canadian dollar, Australian dollar, has been positive 0.44% in the last hour. Okay? And the same with the rest. You have all of these numbers here. Now, basically what I'm doing is, I'm taking this, I took the strongest and the weakest of all these, and then listed them here. And this will change as the prices change. So the strongest currency at this time, on an hourly basis in the last hour, has been euro, and the weakest has been the Australian dollar. In the last day, the strongest has been the euro, and the weakest has been the Canadian dollar. In the last week, the strongest has been the euro, weakest has been the US dollar. Okay, so there's not a lot of agreement on the weakest, but on the strongest, there has been agreement within the last week, day, and hour that it has been the euro. Okay, so now I take this information and what do? This is the most important aspect of this database, and it's right here. Okay, if you take a look here, the most important aspect of this database is this little graph. And on Excel, you could take the prices, or you could take the data from other cells and you put it together in graph format. So this just makes it very easy to see what's going on here. And as we can see, in the last hour, since actually it's been more than the last hour, since 9 a.m. this morning, Eastern Time, we've seen that euro by far has been the strongest. Now, since yesterday, also it has been by far the strongest. And since last week, since the end of last week, the close of last week, it has also by far been the strongest. Now, within the last month, or since the beginning of the year, it has not, because we saw a lot of weakness in the beginning, the very beginning of the year. But it is starting to grow. Now, what is this telling you? Now, if you move down a little bit, you can see here, underneath these 4 graphs, I have time frame agreement. Now, this is what I'm talking about in terms of the signals. So I have 2 time frame agreement, which is basically the hourly and the daily. If the hourly and the daily are agreeing that euro is the strongest, then I'm going to have a signal here in red. Okay, and if 3 time frames are agreeing, let's say the hourly, the daily, and the in this case, there's agreement that one currency pair is the strongest or weakest, then I have that right here. So euro there has been a great opportunity, within the last, on a short-term basis since yesterday, there has been an opportunity to buy euro. Now, buy euro against what? If you take a look here, okay, there are several different possibilities. On the monthly, if we're looking at weakness on the monthly, we have Swiss franc as the absolute weakest. Okay, on the weekly, we also see that that Swiss franc has been weak, but we have U.S. dollar as being very weak as well. Okay, although on the monthly basis it has been relatively strong, but on a weekly basis we see U.S. dollar has been weak. On a daily basis, U.S. dollar has also been weak, and then since 9 a.m. this morning, U.S. dollar has been weak. So that might be a candidate. There has not been agreement among the three different time frames that there's a weakest. But if you're looking for candidates, it could possibly be, at least within the last hour, it could possibly be the U.S. dollar, the Australian dollar, or the Japanese yen. So, but oftentimes we will see signals coming out here of the strongest and weakness. At that point, those could be opportunities to get into trades. Okay. So, any questions you have on this? I'd be more than happy to take. Okay. The question here, so your KC41, so your buy or sell is on past data. Yes. As always, it's on past data. As we as technical analysts, we're looking at past data to give us possibility of what might happen in the future, and that's all you could do as a technical trader. And same with any type of trading. You're looking at past data and see how it might inform the future, and then you're looking to react to past price data and current price data and see how that might work with the future. So basically, what I'm doing here is I'm looking for momentum, and momentum on a long-term basis, a medium-term basis, and a short-term basis. I'm looking for momentum in a certain direction. Okay, seems a lot of work and a bit complicated. Yes, trading is work. Trading and any type of analysis of the markets is actually work. So, this has been work trying to create this database. But once, if you take a look here, once you have this type of database, you see on different time frames at a glance where are the possible opportunities, as opposed to, I will also go through all of the traditional charts, the bar charts and the candlestick charts, looking for opportunities there as well. Of course, that's what I do. But at the same time, looking at this at a glance will tell me where the strength is, where the weakness is in the market. Tim, I've done some programming in the past. I know how much work this must have been. Yeah, this was actually a lot of work. I mean, the concept is very simple, but actually putting into a database and getting this, it looks very simple, but behind there, there was, quite some work to be done. Where do we find this in MT4? Okay, Stevie, you don't find this in MT4. You could get an MT4 from any broker for free. You would just get a demo of it, and then all you have to do, and I have MT4 open here, all you have to do is simply get MT4 running, and then you go to, in order to get the data feed, the tools options, and then once you're at tools and options, then you enable DDE server, and that'll give you the dynamic data feed that will enable this type of automatic assessment of strength and weakness. Okay. Yeah, there are a bunch of questions here. How does this help your entry timing? This helps your entry timing tremendously, because you're seeing on a real-time basis what's gaining in strength, what's losing in strength, where the biggest discrepancy is. When you're looking, when you're looking at momentum, you're looking for the biggest discrepancy between the strongest and the weakest. And once you find that, if it's on a consistent basis, if it's on a multiple time frame basis, then you have a good idea that because of that large discrepancy, then the momentum is in this direction, and you have a strong directional bias right there. So it helps tremendously. And Rod, wouldn't it be more beneficial to know what is growing in strength or weakness? That's what you could see right here. Okay, I could see the growth and the diminishment of strength and weakness right in front of me. It's very simple to see this. Roger, you say that major advantage is you have the direct feed in from MT4. You could have the direct feed. Okay, it's a simple calculation that you put in one of these. It's not a calculation; it's a simple formula that you put into. I just showed you actually the formula. I'll show it to you again. Okay, so this formula is right up here: MT4, and then bid USD CAD, and that will give you the live data feed from MT4. Boyke, great question. Which is more important, this or actual charts? You know what? I am a traditional technical analyst, so I use charts all day long, every day, and I have for many, many, many years. At the same time, this type of thing is extremely helpful in at a glance look at where the opportunities are. So this morning we saw the opportunity in euro dollar. Not necessarily now, but in this morning we saw the growth in the strength of euro dollar and the time frame agreement between weekly, daily, and hourly, and we saw the opportunity right there in this database. And then you could go to the chart and perhaps look for entry signals. Okay, I think I'm running out of time here. Okay. If you have any questions about this, I think I've run out of time here. If you have any questions about this or anything else I've talked about today, please feel free. Let me put up my email address real quick. Okay. If you have any questions whatsoever, please feel free to email me. You could check out Chart of the Day at fxsolutions.com as well as my blog at fxpath.fxstreet.com. Take a look at my DVD set at fxstreet.com and my book. And, I'm very happy to answer any questions. I always answer all my emails, so please feel free if you have any questions. And I will also be speaking in New York at the February Traders Expo. So I'll be talking about high probability trading as well as strength and weakness pairing, etc. So if you find yourself in New York or at the Trading Expo, please feel free to drop by, and I'd be very happy to meet any and all of you. So thank you very much, everyone, and have a great day.